So, ladies and gentlemen, please welcome the Deputy Prime Minister of Singapore. Thank you very much indeed for coming. Finance Minister, thank you very much, Finance Minister Heng, for coming with us today. My name is David Marsh. I am the Chairman of OMFIF. It's a great pleasure to welcome you here today for this brief seminar to launch our annual book. Many of you who know about the game of cricket will know about the Wisden Cricketing Almanac. And this book, Global Public Investor, it is to the central banking and sovereign community what the Wisden Almanac is to the world of cricket. It is that thing that you look out for every single year. It's a huge pleasure to be here with the SGX, and thank you so much for our presence here today. I'm going to be introducing in a moment Kwok Chong Seng, the chairman, to say a few words. We've also taken a leaf out of the central banker's book by saying we're going to come back here with your great hospitality on the 10th of June next year. My German friends in the audience will know the secret of the phrase, the same procedure every year. So we will be back again next year. I just wanted to say a few words before introducing the chairman about Singapore. It is a great honour for us to be here. Singapore is a small country with a very large footprint in a changing world. And I do think that we in Europe, rather chaotic state in Europe at the moment, our country has contributed to that. I think we do look to Singapore as a beacon of stability in what appears to be a very turbulent and changeable world. And you've managed to hold the ring, I think, very well between these two great behemoths of China and the United States. Goodness knows how that will all work out, but we look to you as an island of stability in an otherwise rather turbulent sea. So thank you for hosting us. We're really privileged to be here and look forward to many, many further years of launching the Global Public Investor. It's now in its 6th year. There's lots of stories in this Global Public Investor, and we're going to be talking about that. We're talking about the creditor positions in the world economy, how China is now the number 3 net creditor in the world economy. Germany has become the number 2. Sometimes it's quite dangerous to have people owing you a lot of money, which is the case in Germany. And the other big news, we would say, is how the world central banks have started to move into equities. The central banks of the world always used to be very good at protecting other countries and other institutions from risk, but it now seems that the central banks always used to be very risk averse and now becoming risk takers themselves by having surpassed $1 trillion in equities in terms of their reserve management. So those are just a couple of the narratives in our book. As you can see, it's all quite thrilling. But before we go on to talk about that, and before the Deputy Prime Minister will talk, he's going to be introduced by my friend Frank Scheiding. I'd now like to ask the Chairman of SGX to say a few words. Thank you very much indeed for your hospitality. Looking forward to the rest of the morning. Thank you.
Mr. Heng Swee Keat, Acting Prime Minister, Minister for Finance, Mr. David Marsh, Chairman OMFIF, distinguished guests, ladies and gentlemen, a very good morning to you and a warm welcome to SGX. It is indeed a privilege to be the venue host for the launch of the 6th edition of the Global Public Investor Forum, which is taking place for the first time in Asia. The presence of so many senior leaders here today indicates the importance of the good work the OMFIF is doing. It is essential to have a neutral platform such as this, where members of public and private sector institutions can interact as well as exchange insights and best practices. This morning, OMFIF will share with us key findings of their survey with 750 central banks, sovereign funds, and public pension funds. With investable assets of over $38 trillion, the investment activities and perspectives of these global public investors are of great interest, given the significant impact they have on global financial markets. I will let the experts delve into the report findings, but I would just like to share 3 points with you so that you can frame your discussions today. First, global public investors today are managing more money than ever before while having to deal with unprecedented challenges. Government institutions and corporations around the world have to cope with the volatile markets and the current geopolitical threats. There are many uncertainties: rising anti-globalization, populism, trade wars, technological disruption, climate change, and the list goes on. Secondly, much of the asset growth we are seeing is concentrated in Asia, which continues to be on every investor's radar. This dynamic region is where new growth opportunities lie, but it is also a region that is difficult to navigate given its diversity and idiosyncratic risks. At SGX, we have been building a strong derivatives business that will help investors manage these dynamic risks. We believe that our transparent governance framework and our strong financial backing will provide a robust clearinghouse for Asian risks. Finally, just a few words on stewardship. In this increasingly complex business environment, we are reminded that the concept of stewardship has never been more important for both public and private institutions alike. As all of us have fiduciary duties, and we are responsible for assets which have been entrusted to us, we need to steward these assets carefully and also continue to grow these assets while ensuring that they can be handed over to the next generation in a better shape. This means adopting policies and strategies that can generate superior risk-adjusted returns in the long term. But at the same time, we need to go beyond financial risk and performance. Stewardship also includes managing intangible assets and considering the impact our decisions have on our stakeholders, society, and the environment. This is not just about climate change and going green. It's about the sustainability of our assets, our people, our economies, and the world we live in for generations to come. As members of the financial community, we can all play a role in setting an even higher bar for ourselves and to invest more for good. With this, I wish you all a rewarding forum, and I hope it will translate many of these ideas into actions that can bring us further forward. Thank you very much.
Good morning, ladies and gentlemen. First of all, thank you very much, David. Thanks, Adam. Thanks, Denai, and all the rest of the M15. As usual, you have put together an excellent morning conference here, and it's my privilege and honor to give a short speech, and I will keep it short, David, I promise. First of all, thank you very much for that you're all coming here to this event, and it's a great honor that the acting Prime Minister, I have to say, and officially the Deputy Prime Minister, Mr. Heng Swee Keat, is around. Please give him an applause. Our ways have crossed a couple of times when he was also acting what he is currently doing as well as a finance minister. And we both bankers from history, and I can just say his government and what he has done is quite a lot to make Singapore the leading hub in the financial sector here in the Asian time zone. And I think we can be very proud of that. And we are all proud of what you have done. Thank you very much. But we are all here to discuss our future, the future for our children, for our society. Having more officially counting people on this planet than 8 billion, and soon we are more than 10, I think we have to act, and we are probably already far too late. Having said that, I appreciate very much among the governments on this globe, particularly in Asia and in Europe, we will take care now. We have to take care. It was a study, and belong on a study of Professor Dr. Schellnhuber, who is acting on the University of Potsdam, that we have these 2 degrees target, which was adjusted to 1.5 degrees. And this is, forgive me this strong word, damn needed. Because if you look to this region, we have the 8 mountain states among the Himalaya. The white roof is melting quite heavily. That means, 20 years from now, they might, or for sure, they will face a severe problem to have access to fresh water. And that causes fear and hopefully not war. So therefore, it is in all of our interest to save such a problem. But this is just one example of many. Parts of Europe might be gone underwater if the ocean level will rise. And there is a highly likelihood, so we have to fight that. America, under the current political regime, I know it's not as easy to put high value and focus on sustainability, but thank God to the structure of the 50 United States, you have very good examples like the state New York and like California. They will take care of the environment, and I hope in the near future we will hear more positive signals also from the US side. Again, having said that, today's conference is about these topics, and one huge potential is obviously the bond market side, and it's more than 100 trillion US dollar worth of volume and chances for the near future. Here we have to contribute, and I'm very glad that we also here as the SGX building, because the stock exchanges will also make a big difference in that. I just learned that you also close in talks with the Deutsche Stock Exchange, not about a merger, but more about sustainability. How can you make these trading places also a better place for sustainability? How can you contribute? And I think you should talk to each other more frequently, more often. Singapore is doing that. I wish that all other stock exchanges in the region, like Shanghai and others, doing the same thing, because if they brought up these topics, it is very difficult, together with our society, that our politicians can ignore that. Myself, I have the pleasure of being now one of the members of the German government expert group for sustainability. Whatever that means, we will find out in the near future. But we try to encourage our European politicians in Brussels to pay more contribution and action. And as I said, that is more than needed. But let me finally also thank very much our local branch manager, Klaus Borek, and its team, and obviously also Martin Wehling, where is he, Martin? Martin? It's over there, so right and left. Martin will succeed him in roughly a year and a half time. Klaus, is that right? I think they have also done an excellent job, and Martin, being on the DCM side, that capital market side, is contributing quite a lot also in Greater China on the sustainable side. Thank you very much, Martin. And obviously as well to Christopher and his team from Barings. It's always a pleasure to be and team up with you guys, and let's have a great day together. And again, thank you very much, David, and let's have a wonderful day. Thank you.
Mr. David Marsh, Chairman of the Official Monetary and Financial Institutions Forum, Mr. Kwok Chong Sing, Chairman of Singapore Exchange, distinguished guests, ladies and gentlemen. Thank you for inviting me to join you at the launch of this 2019 Global Investor Report. And to our delegates from abroad, I extend a warm welcome to all of you. Now, earlier on, David had some nice words to say about Singapore being an island of stability. But let me remind every Singaporean here that we are a very small island, and you can only be stable if the waves are not too high. But if the waves are too high, you'll also be swept under. The one thing which has the region that I'm very happy with is how the region is coming together. Very happy to see Governor Zeti here with us. Governor Zeti and I we are central bankers together. We had many meetings, and I remember one meeting where Governor Zeti said, why is it that the finance ministers and the central bank governors meet separately? We should be meeting together. And out of a suggestion, we eventually met together as finance minister and central banks. And that has been a great help. So we recently held, last year when Singapore was the chair of ASEAN, I chaired a meeting together with Ravi Menon for all 20 of us to be in the same room. And just a few months back, we were in Chiang Rai for a very big meeting of our central bank and finance minister. And that's been a great help. I just had a very lovely dinner with Governor Zeti and our spouses in KL when we were there, and had a very good discussion. So I'm very glad that we are keeping up with this context. So our hope is that the region, certainly ASEAN with 10 economies coming together, working together to maintain stability, will help to provide a bigger anchor of stability. And in turn, ASEAN is also engaging all our member countries in the region, ASEAN Plus 3. We now have regular meetings, as well as many of us are also involved in the APEC discussions. So I hope that we can enlarge our circle of work. Now, Frank mentioned about global warming and the impact of the global warming. And it's something which we take very seriously. I was at a forum not long ago, like just a few weeks back, where a Singapore speaker showed a map of what happens when global temperature rises, which part of Singapore will be inundated. And just a small rise, and I saw that my house was one of those that will be inundated. The speaker's house is a little nearer Bukit Timah Hill, so his is less vulnerable. So maybe I should suggest to Chong Sing and the SGX team, maybe you should start a trading in options for us to rent a house from one another. Now, I want to first thank the Official Monetary and Financial Institutions Forum for launching this Global Public Investors Report 2019 in Singapore. This is the first time that a publication is launched outside of London. Back in 2016, the OMFIF set up its Asia Pacific headquarters in Singapore, the first office outside London. I'm encouraged to see OMFIF deepening its presence in Asia over the years. The theme for today's discussion, Global Public Investors and a Sustainable World Economy, is timely. The global economy has been growing at a remarkable pace over the last 50 years. But this rapid growth has led to growing environmental challenges. The global commons are under threat. Global surface temperature has been rising significantly, caused mainly by emissions of greenhouse gases from industrialization and power generation. This has led to a rise in the frequency and severity of natural catastrophes, such as pandemics, hurricanes, and droughts. Sea levels have also risen, which for many small island states like Singapore is an existential challenge. Within Asia, the UN Economic and Social Commission for Asia and the Pacific predicts that economic losses from natural disasters and weather catastrophes will reach $160 billion per year by 2030. The world is now in search of a new sustainable equilibrium, one that will enable us to achieve good economic progress while also protecting the environment. I'm glad that countries and institutions around the world are committing to sustainable development. All member states have signed up to the United Nations Sustainable Development Goals and are working towards achieving these goals by 2030. Companies are increasingly adopting new practices and investing in new technologies that are more environmentally sustainable. Consumers and investors are increasingly more conscious of the environmental impact of what they consume and what they invest in. And we're gathered here to explore how monetary and financial institutions can continue to capitalize sustainable growth. Asia will face many of the challenges as well as the opportunities of sustainable development in the coming years. Asia economy's share of global GDP is projected to double from 26% in 2000 to 50% by 2050. Countries in Asia are also experiencing the fastest rate of urbanization. Just China and India alone will add a total of 670 million urban dwellers between 2018 and 2050. Throughout Asia, rapid growth and urbanization will put significant pressure on public services, infrastructure, and the environment. Asia's growth presents many investment opportunities. But how we invest and how we respond to these pressures will determine whether Asia's growth is sustainable. The estimated financing needs to support the greening of Asian economies are substantial. China alone has estimated that it will require US $450 to $600 billion of investment annually to achieve the green policy goals under the 13th Five-Year Plan. Closer to home, it is estimated that ASEAN will need US $200 billion in green investment annually till 2030. Investment in science and technology in particular can open up new possibilities for sustainable development. Many countries in Asia are already doing so. For example, China's investments in renewable energy accounted for more than 45% of the global total in 2017, and it is currently the world leader in renewable energy production. In Japan, sustainable investments increased from just 3% of total professionally managed assets in the country in 2016 to 18% in 2018. So a growth of 3% to 18% within just 2 years. Japan also invests heavily in research and development, with gross expenditures on R&D to GDP ratio exceeding the average of other high-income countries. In Singapore, we too are investing almost $1 billion in R&D on urban solutions and sustainability. Asia can continue to benefit from more investments. And let me share a few examples of some completed projects. China is home to the world's largest floating solar plant, and the Shenzhen East waste-to-energy plant, slated to come into operation next year, will also be the largest of its kind in the world. Japan's Daiwa House Industry, one of Japan's largest home builder, has developed energy self-sufficient buildings, which can generate enough renewable energy to meet the building's energy consumption needs. In Singapore, I just opened a first net zero energy new build building at the National University of Singapore a few months back. And we have also developed the world's biggest underground district cooling network in the Marina Bay Financial District to reduce energy use and our carbon footprint. I would therefore encourage monetary and financial institutions to capitalize on the growth opportunities in Asia and channel funds towards sustainable development. Singapore seeks to contribute to Asia's sustainable growth by serving as a key node for channeling financing to the region. Just as the OMFIF has set up its regional headquarters in Singapore to report on developments in the region, we hope that monetary and financial institutions, including global public investors, will find Singapore a good base for investing in the region. Let me share 3 ways that Singapore is seeking to contribute to Asia's sustainable growth. First, the Infrastructure Asia initiative by Singapore can be a conduit for institutions to invest in infrastructure development in Asia. Second, Singapore is growing our sustainable finance sector to promote sustainable economic growth in the region. And third, Singapore is contributing to regional efforts to build resiliency against natural catastrophes, which have increased in frequency and intensity due to climate change. First, in 2017, Singapore launched the Infrastructure Asia Office to connect the demand and supply side of infrastructure investments. Infrastructure forms the backbone of any country and a foundation for economic growth and job creation. A crucial component of infrastructure development is private sector financing. But only about 10% of infrastructure in the region are readily bankable, and an estimated 30% could become bankable with some added support. Infrastructure Asia aims to build up both the supply of and the demand for bankable infrastructure projects in the region. It builds partnerships among industry players, multilateral development banks, and the public sector, with the aim of helping governments better structure, finance, and implement infrastructure projects in Asia. An example of a partnership brokered by Infrastructure Asia is a recently announced China-Singapore co-investment platform by Surbana Jurong and the Silk Road Fund. Infrastructure Asia brought Surbana Jurong and the Silk Road Fund together due to their complementary capabilities and common intent of investing in Southeast Asia. The US $500 million platform will focus primarily on financing greenfield infrastructure projects that can contribute to sustainable economic and social growth of communities in Southeast Asia. Infrastructure Asia is also partnering the World Bank in this effort. The World Bank has set up the Urban Development and Infrastructure Hub in Singapore to build capacity in the region for planning and executing infrastructure projects. The IFC and MIGA have significant presence in Singapore. So Infrastructure Asia hopes to reach out to more financial institutions and potential stakeholders to explore opportunities in sustainable development. And I welcome you to consider working with us when you explore new investments in the region. A second way that Singapore is seeking to contribute to Asia's sustainable growth is by growing our sustainable finance sector. The financial sector is instrumental in directing financial flows to drive sustainable development. The Monetary Authority of Singapore is seeking to nurture the growth of green, social, and sustainability bonds. To catalyze the scaling up of such bonds, the MAS introduced a Green Bond Grant Scheme in 2017, which was expanded to include social and sustainability bond this year. So far, over $6 billion worth of green bonds have been issued here, and we aim to further scale this up over time. The MAS is also working with partners such as the Institute of Banking and Finance, International Finance Corporation, and the Worldwide Fund for Nature, or WWF, to enhance the awareness of and knowledge of the financial sector on sustainable financing. I'm very encouraged that the WWF launched its Asia Sustainable Finance Initiative in Singapore earlier this year. This multi-stakeholder platform aims to enable financial institutions operating in the region to build capacity in sustainable finance. ASFI's knowledge partners can co-develop green financial solutions and with financial institutions and help them manage meaningfully with their portfolio companies on the risks and opportunities of investing in sustainability. The third way that Singapore is seeking to contribute to sustainable growth in Asia is to help strengthen the region's resiliency against natural catastrophes, which have increased in intensity and frequency due to climate change. Currently, only about 5% of the economic losses are insured in developing Asia. This puts tremendous strain on governments of developing nations in the event of a natural catastrophe, which can set back economic progress in the affected areas for years to come. The MAS is currently developing the market for insurance-linked securities as an alternative risk financing solution to address protection gaps, diversify the cost of natural catastrophic events, and alleviate the fiscal burdens on governments. The MAS has set up a natural catastrophe data analytics exchange to support the structuring, modeling, and securitization of ILS transactions through improving data quality and promoting standardization. The MAS has also introduced an ILS grant scheme to defray the costs associated with issuing a catastrophic bond in Singapore. The first catastrophic bond was issued out of Singapore earlier this year, and we hope to grow this to better meet Asia's needs for protection against disasters. We are also contributing by hosting the Southeast Asia Disaster Risk Insurance Facility, or SEADRIF, which will be established in Singapore later this year. SEADRIF is a facility for ASEAN countries to access immediate financing in the aftermath of a natural disaster. This will further strengthen their financial resilience to climate risk. So to conclude, Asia will face significant challenges as well as opportunities on sustainable economic development in the coming years. Nations around the world have committed to the UN Sustainable Development Goals. It is critical that we generate economic growth and at the same time protect the environment of our planet. Global public investors with total holdings of almost $38 trillion, or over 40% of global GDP, will play an instrumental role in financing the sustainable growth of Asia and around the world. I'm glad that 15% of respondents to OMFIF's GPI 2019 Asset Allocation Survey indicated that they are looking to increase allocation to the region in the next 1 to 2 years. On our part, Singapore hopes to contribute to Asia's sustainable growth through the Infrastructure Asia Initiative, which serves to connect the demand and supply side of infrastructure financing, through growing our sustainable finance sector to better direct financial flows to drive sustainable growth in the region, and through strengthening the region's resiliency against natural catastrophes. So I look forward to GPI's partnering Singapore in driving sustainable growth in Asia for good returns and be a force for good. I wish you all a fruitful day of discussion ahead. Thank you.